actually I posted on Blossom and asked the audience if there is any question they would like me to cover in one of the upcoming videos, and I definitely received some interesting questions in there. I'll be going through it. If you haven't checked out Blossom app, and if you are an investor here in Canada, you definitely want to do so. It's a wonderful community of over 60,000 Canadian investors, including beginner investors as well as those who are very experienced, all coming together, sharing their expertise, experiences, lessons learned, failures, mistakes, successes, and through that communication and interactions, learning from one another. There's also a ton of amazing contents, educational ones that you can access for free. The download link is provided in the description of the video. I see here a question from Romel. He's saying how to do this. I'm not sure exactly, Romel, whether your question is asking me whether about the self-made dividends. If that was the case, that's a topic that I covered in this video. So I do definitely encourage you to watch this video in full and let me know still if you have any question. If your question was how I'm showing the portfolio breakdown balance, all I needed to do is within the app, I went to, not on profile, but I went to portfolio. That's the segment that only visible to you. And what I did, I just took a screenshot of this and then added that image to my post. Luisa is asking, if you were to start over from the very beginning, is there anything you would do differently or avoid? Absolutely, Luisa. In fact, I had made a video, I believe, last week touching this topic, on this topic. I did mention when I first started investing about 6 or 7 years ago, I started investing from robo-advisors. And to me, that was smart. When you first get started investing and you have no idea what you're doing, I think that's a very smart way of handling things. Robo-advisors gets your feet wet and allows you to understand a little bit how the stock market works, and also prepares you from the lens of, wow, stock market doesn't always goes up, it even goes down. And I learned that the hard way. I remember early days when I first started with Wealthsimple robo-advisor tool, and after a few weeks I saw that my investments were going down. I was so mad. I emailed Wealthsimple team and kind of sarcastically asking them, hey, this was supposed to be an investment. I'm very disappointed. What is happening? Like, I'm only even considering to close my accounts. And to which Wealthsimple responded, probably through one of their generic emails, and saying that, the stock market has ups and downs, and they shared some articles that I followed along to learn more about. And I'm so happy that I actually didn't close my account. I kind of, from that was almost like a wake-up call for me. I kind of persisted and continued to invest, and over time I started seeing like, yeah, that's how a stock market works. Don't assume that just you want to put your money in and the next day or next week or next month or next year or even next 2 years, you're going to see necessarily your money going up. Sure, there are some good years, bull markets that it could happen, but also there are markets, times in the market that's not the case, and you have to be ready for it. You have to have the right mindset for that. Those were some of the initial kind of aha moments for me. Other things that I would do differently, after I would say the first, second year or third year, I started to get almost cocky and too confident and started to pick stocks. And during that time, I think there was the craze as well of the read investing, and it's like, oh, let's get into it, let's buy all these stocks because they're all going up. I remember I was telling some of my friends, like, it's almost like a train that is going at a high speed. I was referring to the stock prices, how it's going up. It's just a matter of at what station you're going to get on it, because the sooner you get on it, you're better. I started even using some money from margin accounts, and it was the worst decision of my life. I can't even describe how horrible that experience was, because not only things didn't go according to plan, but also it was when you start getting some of those margin calls, which was not actually a call, but through an email, forcing me to like pay back some of the money, because otherwise, I didn't have sufficient money to kind of sustain my borrowing from the Questrade margin account. I really start panicking. That's really made my life miserable. A lot of mistakes along the way, picking stocks, trying to pick winning stocks. Of course, there were some lucky gains along the way, don't get me wrong, and you feel so proud of it. But at the end of the day, I learned, and my reflection, if I could do things differently, I would have absolutely personally started investing index fund investing, broad market in index fund, not even going through sector sector fund that are for ETFs, because there are so many ETFs focus on technology, energy, finances, and I did all of that too. But really, I don't think personally I would want to do that ever again. I think if you're going to do that, it's mostly you're still trying to speculate. Oh, this market is going to do well, this market is going to do well. It's better personally, in my opinion, to just go for broad market, a globally diversified ETF, such as the ones that I have in my portfolio. I'm not saying they are the only ones, but to me, those are some of the good ones that I feel confident with. Jim has asked me how you liquidate your capital gains. What strategy do you use to avoid CRA and pay less taxes? So Jim, that's a great question. For me, as I touched on this video a little bit, I'm still far away from my retirement date. That's why I haven't really had the need to liquidate any of my portfolio. The only exception to that was a few times in the past whereby I had to withdraw a large amount of money for down payment for the house that when we were buying it. At that time, I believe at that time I was not even in index fund. I was in the stocks. So I ended up selling most of my stocks, some at profit, some at loss, just, needed the money. So to me, it's just a matter of you have to plan for it. I would probably follow an approach of self-made dividend in withdrawals through a self-withdrawal rate that I would be comfortable with as I get closer to my retirement years, which, as I indicated earlier on, probably at least 10 or so years away from it at this stage. Matt has a question here, and thank you, Matt, for all your insightful comments and posts. I really enjoy the interactions and all the feedback that you've provided before. Thank you, man. So he's asking me, maintaining a portfolio of individual stocks can be somewhat time-consuming, monitoring the business KPI, reviewing earnings reports, staying up to date on news, etc. Just curious, how much time you spend a week using your more passive approach? So that's a fantastic question, Matt. I know several months ago, even though I had already switched to index investing, I was still spending quite a bit of time every day, just checking my portfolio, where things are at, and I was buying shares of XEQT or VT or VTI individually, manually, like myself, like not through an automation. But I was not really spending time a lot on the market news or researching stocks. Don't get me wrong, not on that, but more so out of passion and interest. These days, I would definitely say as soon as I switched to that automatic recurring buy, and that's a lot of it, I would say kudos to Dan, because he kind of showed kind of how easy it was through a post that he had. So that kind of triggered for me. From there onward, it's got a lot simpler. Honestly, I don't check my portfolio as often. Again, I have that curiosity of maybe for a minute or 2 minutes or so, just logging onto my Blossom, of course, just to check my portfolio on my brokerage accounts. But it's not for changing anything. It's pretty much, it's on autopilot and it's doing things on autopilot. I do spend quite a some time, of course, on Blossom, but that's again as of a passion. It's not because I feel the need that I have to change anything about my portfolio, more so out of the passion and interest to engage with investors such as yourselves and others on Blossom app. I'd love to do that interaction, learn, comment, and kind of learn from others. I really love that aspect of learning. It's very important to me. Chris has a question. He's saying that he's been following my posts lately and slowly increasing his portfolio on XEQT. So I introduced it to both mine and my wife's TFSA. Okay, plus adding it to my daughter's RESP. That's fantastic, Chris. It's my pleasure. There's so many other investors here on this platform that are also very well, I would say, knowledgeable and like very experienced around investing in XEQT and other broad market investments. KYT is definitely, I want to give him a shout out. He's one of those investors that I've thoroughly enjoyed interacting with. He was the one who was also very much educating me and others around why he's investing in XEQT. When I had that conversation with him and later on with some of my work colleagues, that's what's the trigger for me to really start exploring XEQT more seriously. So yeah, we have, I think, a wonderful community on Blossom. And I think in your case, if you're thinking about long term, I think an index fund such as XEQT is a good choice in my perspective for long term. That's something that I would definitely consider even for my family. As I indicated, for myself and my wife, we definitely have it in our portfolio. Bashar is asking how to distribute $10,000 in dividend stocks. And the second question is around YTSL or Tesla stocks, and YAMZ versus Amazon. So Bashar, I really appreciate the question. Perhaps respectfully, I have to decline commenting on these questions, especially on the second one, because for me, it's a personal preference. I'm not really a big fan of stock picking these days, or even the ones that use in a covered call approach, such as YTSL, or I'm assuming possibly YAMZ. I'm not as familiar with them, nor is something that I would go to explore. The reason being is that I think for me, they're way too volatile. Don't get me wrong. At one point, I was invested in Tesla and Amazon stocks, not the cover call, but the stocks. I think it was less than a year ago or so I was. And it was very volatile for my liking. Nothing wrong with that, though. If you're like a patient investor and you've done your due diligence and you think those are good companies, you can definitely consider it. Personally, I think actually picking the stocks might be a wiser decision as opposed to going for a covered call type of choice. But again, it's a personal preference based on some of the past research that I've done. I'm not mandating or saying that that's definitely has to be the choice for every investors. To each their own, and it depends on your risk tolerance and your investment style. That might be something that maybe fits your portfolio. As for distributing $10,000 to dividend stocks, I think one thing to consider is if you're really thinking of dividend investments, is that maybe take a moment to pause and rethink. Is that something you absolutely need? Are you needing the dividend income? Are you going to try to use it for as a cash flow for your day-to-day expenses? Or is that something that you're going to still reinvest? Because if that was the case, then maybe you don't need to really invest in dividend stocks. Just because not every company pays a dividend, and there are so many amazing companies out there that do not pay dividend and still have a lot of amazing growth potential for them. So keep that in mind. If you were to really invest in dividend companies, I have already made a video around ultimate guide to ETF investing. I think in there I do introduce several different ETFs that would be good first starting choices for you to consider. Doesn't mean that you have to limit yourself to them, but at least hopefully that gives you some ideas to rethink it and maybe start planning what is the right choice for your portfolio. Hope that helps. Luke is asking how much upfront I had put in to have that 500 plus investment, and how much of actual growth is there. And then there's another comment in there. It's like, oh, that's a pretty legit question. So thank you for that question. I've been actually very transparent in my portfolio. It is shared publicly in my portfolio on Blossom. So I'm gonna show you to you momentarily, so you're able to see exactly where things are at. Currently, the portfolio size, after I've updated, of course, the investments that my wife had, is sitting at $512,659. The amount that I've deposited as a whole is showcased here, $478,756 to the penny. And then what's the realized gain? Even though I've been investing for several years, and then you might be asking me, hey, like then your overall return is showing not really the greatest. The fact that you've been investing for so many years, let's say 6 years or 7 years, absolutely. And that's what I attribute absolutely to a lot of my poor decisions. I think I have to own it. I have to accept the fact that I've made a lot of mistakes over the years, done poorly. And that was actually one of the realizations why I wanted to switch to index fund investing. Because look what all those stock picking got me. Had I perhaps invested just in index fund, I would have absolutely done a lot better. That's why I think for me personally, a baseline is really the beginning of 2023. That's the year that I'm really starting to think that, you know what, I've made all the mistakes, I've done poorly. Let's not overthink it. Sure, the past taught us a lesson, but I don't want to compete with anybody. I'm not trying to say, hey, look at me, I'm beating the market or whatnot. I know I didn't. I know I did poorly, and that was the realization for me that it's not for me. I'd rather invest through index fund investing, and the game plan is for the next 10 years plus, we are going to try to maximize our portfolio through these simplified passive investing through index fund. Thank you so much, everyone, for watching this video until the end. I know this video was a little bit long, so I appreciate your patience. I will definitely add a little bit of that, breakdown of chapters of the video, so you can easily jump to the topic that you're interested in. If you'd like me to cover any other topics for future videos, do let me know. I'll be happy to cover that in subsequent videos. Thank you so much, and I hope to see you all next time.